Hi, everyone. This is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. We have two special guests today. One is a first-time guest, and one is a returning guest. Our first-time guest is Adam Taggart. Our returning guest is Dr. Chris Martenson. They are co-founders of the Crash Course and also peakprosperity.com, and they're co-authors of their new book, Prosper, How to Prepare for the Future and Create a World Worth Inheriting. Thank you for joining me today.
Hey, it's a pleasure to be back with you, Jason.
Thanks so much for having us on.
Now, there's so much going on in the world, whether it's energy markets and oil or gold and silver market or the economy in general with the developing markets. It seems like there's so many problems already here or on the horizon. Is this why you decided to write your book now? Because there's so many different things going on. It's kind of giving me a headache when I look at so many of them. And I guess the average person who doesn't pay as much attention, that they would kind of be left dumbfounded if they didn't have some type of guide.
Sure. Let me start. This is Chris, and I'm sure Adam can fill in where I miss anything. You know, Jason, for years we've had this product, the Crash Course. It's a book. It's a video series. It's problem definition. Anybody who's even mildly curious or alert knows there's problems out there, if not predicaments. And that's part of the world we live in, geopolitically, economically, central banks doing wild and crazy things. And of course, there's a lot of appetite to stay current and understand what's going on in the world. That is a big part of our work. But increasingly, of course, what follows with that is people ask the logical question after they see what's going on in the world, and they ask, well, what should I do? So if the Crash Course is problem definition, this new book, Prosper, is the solution space to address specifically what the individual, a family can do. This is, we didn't write it for corporations. We didn't write it for governments. We really wrote it for the kinds of people we interact with on a daily basis at our website and at seminars. And so this book is the compilation, really, of some of the best practices and things we've learned over the last, for me, almost a decade, for Adam, the last 5 years in working together around how people really can begin to address this. And this isn't a book about, which canned food should I buy, although we have opinions about that. It's really much more broadly speaking to a larger question, which is not only what kinds of things should I consider doing, but what things maybe should I stop doing, and also what kind of a person do I want to be. This has got really, there's some emotional angles to this world we live in and how you face the future that are as important, if not more important, than which physical things you do or acquire. So, that's sort of the quick summary I've got, and Adam, I'm sure can round that out nicely.
I think Chris put it well. I think, Jason, to your point, things are changing. I know you've had Chris on before, and you guys have talked about the trends that the Crash Course series talks about. What we're beginning to see now, and we think we're in the early innings, are the changes that were predicted by the Crash Course. And so we think that that volatility and that number of sort of black swans that you see to begin to circle in the sky is only going to increase in density going forward. And as Chris said, we wrote Prosper to sort of be like an operating manual for how to head into that future, both to provide protection from your vulnerability to those trends, but also to help you be able to chart a course to head into the future with optimism, where you can actually prosper and hopefully come out better off than you are today. We'll get into this, I think, later on in this interview, but the book presents a framework for prosperity, which we really boil down to developing resilience in your life. And there's a number of ways to develop resilience. Financial resilience is only one dimension, but it's usually the place where we start because that's where people are most acutely worried at the beginning. But just to underscore a point that I'm sure we're going to reinforce at the end of the discussion, these steps that we encourage people to take, even if we are completely wrong about when these trends are going to arrive or how intense they're going to be when they do, and even if the future ends up looking pretty much like our lives have been to date, these are not investments that you're going to regret. They are good things to do, and they are life enhancers. Improving your health, developing more substantive relationships where you are being in service to others and they are being in service to you, managing your money more prudently. Like, you're never going to regret doing these things. So we feel very confident offering the guidance that this book provides, because they're just good things to do. But of course, if the changes that we predict in the crash course actually do arrive, or even if they arrive at 50% level, you are going to get dramatically outsized benefits from having taken these steps in advance.
Now, Chris, I don't think governments or central banks will be reading your book, but if they do, you have to let me know about that. If you get a long thank you note from Janet Yellen, maybe with some fresh baked cookies or something like that, you'll have to let me know. But one of the things about prosperity, when I talk to a lot of people, I've been in the financial industry for a while too. I know you guys have worked in there, and Chris, you worked in corporate America as a upper management. But, a lot of people, when they see prosperity, they see it only as money oriented. And then I know a lot of people who have made a lot of money, but they're working long hours. They have health problems. They're miserable. Their wives hate them or want to divorce them. They have no relationship with their kids. So there's a big trade-off that I think, a lot of people who are chasing every last dollar just don't really understand. Does your book cover a lot of this?
Well, it does. And, a quote that Adam pulled up for the section in finances, that none are so poor as those who only have money. And there are a lot of people who think they're well off because they have a lot of money. Of course, anybody who steeps themselves in the world of finance understands the world of digital fiat currency. It's potentially easy come, easy go. You never know when the next Cyprus bail-in is going to come and take 40% of your wealth, or worse, you're in Venezuela and you're watching your currency that you're trapped in erode by hundreds of percent per year officially, and more than that unofficially, et cetera. So what we say is, look, if you have financial wealth, that's great. Learn how to manage it. It's actually the biggest chapter in Prosper, the book. And once you've figured out how to manage it, you have to dedicate a portion of that to building your true wealth in other areas. And so we have 8 forms of capital that we talk about. Financial capital is just one. So to give an example, I could look out my window and I can see a 70 by 100 foot garden in a little grape vineyard that I've got, and I've got a nice orchard over there, and I spend money to improve my soil and increase the abundance of the living capital that's around me, the soil, the plants, all of that. And so we think, Adam and I think, that to really be diversified doesn't mean owning a nice portfolio of stocks and bonds with a little foreign exposure. True diversification means having some of your actual wealth out of the paper system of wealth and into real tangible things. And some of those are actually intangible things. Harder to put money into this, but it helps a little bit. Emotional capital. That's an area, you alluded to that with people who are working hard, making a lot of money, but unhappy. We'll expand that and say that for people who are unaware of the changes that are coming or resistant to looking at them, and they get blindsided by these changes, whatever those happen to be, maybe they lose their job, maybe it might be more disruptive than that. Maybe they lose some of their wealth and they weren't prepared for that. Maybe they don't understand that their whole industry is being phased out by technological progress. Whatever the insult is, if an individual isn't ready for that, they aren't emotionally prepared for that change that's coming, they're likely to freeze up, make bad decisions, shut down, emotionally, and possibly even do what a lot of people do, which is numb themselves out with alcohol, eating, sex, sleeping on the couch, watching TV, whatever those things are. And then they will actually be harmed more by their own emotional responses to the change than the change itself could have possibly harmed them. So we do talk, like, emotional capital is a big part of the book, and we talk about that too. So yes, we do talk about finance. We understand the world of finance. Many people start there. And our book is about, listen, you got to go further than that. You have to be ready in a lot of dimensions. And so I told you about the living capital and the emotional capital. So those are a couple that round out, hopefully, and address the question you asked.
Now, Adam, you worked on Wall Street, and Wall Street just continues to, I guess, promote new ways to find new bubbles, to financialize things. I went to a technology conference here in Washington, D.C. a couple months ago, and they're working on financializing student loans by tranches and ratings of students and, looking for people out there desperate for yield so they can chop them up and buy and invest in different tranches. When do you think Wall Street will learn its lesson?
Well, we believe there are 2 ways to learn. There's learning by insight, and then there's learning by pain, basically where a lesson is forced upon you. And Chris and I gave up a long time ago, I think even individually before we started working together, that Wall Street was going to learn by insight. And so to your question about when are they going to learn their lessons and start sort of, learning to live within their means and not chronically blow asset bubbles and not basically exist to take other people's money and put it from many other pockets into just a few pockets. I don't think that's going to happen willfully. I think what it's going to require is another 2008 style market correction. Honestly, I'm expecting one larger than 2008 and more painful for 2008, largely for the reason that the fundamental reasons that caused that financial crisis have not been addressed. In fact, they have literally been papered over with the $4 trillion in thin air money that's been printed by the main world central banks. We could double that if we're going to include the Bank of China. So honestly, Jason, I don't see it happening. I don't see the Wall Street machine having the discipline to self-regulate itself to more intelligent action, and I don't see the DC/regulatory machine either being competent enough or even desirous of reining in their excesses. I think the market forces are going to have to do it for us.
Yeah, I agree. I live right outside of Washington, D.C., and I think a lot of these regulators, they're looking to go work in the corporate world at a higher paying job.
Absolutely.
In the compliance departments. Yeah. Well, I want to talk about the energy markets right now. The oil market is melting down. It's been in an enormous bust. And when I hear CNBC or Bloomberg talk, it's so good that oil prices are low. But most of the rest of the world, they need higher oil prices for those higher paying jobs. Their economies are very reliant on oil prices because that's where a lot of the jobs are in commodities. If the rest of the world is in major trouble because, they were reliant on higher commodities for base metals and oil and copper, how can the financial media then continue to sell that the U.S. economy is insulated and it's going to continue to strong? It just doesn't make sense with me. It seems like a big divergence.
Well, it's a huge divergence, and oil is just one of the key commodities that collectively are signaling a very, very pronounced global weakness, worse, I think, even than in 2009. And somehow the financial markets haven't caught up to that, at least in terms of equities. Bonds are certainly catching on. CCC rated bonds are certainly showing a lot of distress. We're seeing high yield junk start to take off. In fact, Jason, this period of time in the last month and a half, we've seen a very, very odd thing, hard to find in the data, which shows that CCC bond yields have been rising while the stock market rises. Those are usually a very strongly anti-correlated series, but they're rising. You put your finger on, I think, what's going to be the heart of part of the distress trouble, of course. It's going to be in the energy business. Oil right now, when we're recording this, is just closed for the day under $37 a barrel. Alaska just announced that they're going to have their first income tax in over 30 years to cover up a shortfall. Alaska normally gives people an oil dividend for living in the state. Big turnaround for the people of Alaska. So yeah, if you look at what's happening for Alaska as sort of a proxy for what might be happening in other countries, maybe we can understand it more easily because it's Alaska and we think we know something about it, right? We're all Americans who are talking about this on this call. So there's Alaska. It was rolling in dough. It's spending money. It's handing it out to people. Those people are spending it, and now the exact reverse of that's happening. People are not getting money, and they're having to pay money to the state, and the state's revenues are way down. So guess what? It's going to be very, very difficult economically in Alaska because their oil revenues have just been clobbered. And they've got a decent fund, rainy day fund, but it's not as decent as, say, Saudi Arabia's. And we're seeing extraordinary difficult in every oil exporting nation out there, whether we were talking about the state of Alaska, but Venezuela's falling apart as we speak right now. Brazil's having an extraordinarily hard time. Mexico's not doing all that great. This looks like the oil war is really a heavyweight war between Russia and mostly Saudi Arabia at this stage. But still, I think oil is sending at least one appropriate signal, which is mirrored by what we see in copper, coal, iron ore, all of which are so far down from their 2011 highs that we're seeing extraordinary distress in the companies that are associated with that. Mining companies cutting capex, divesting assets, cutting dividends, watching their bond yields blow out, watching their credit default swaps and associated corporate bonds exploding. these are all signs that something is very much not right in the system. And yet, out of nowhere, you'll see 20 points put on the S&P at the opening bell by somebody who just has to own a whole bunch of E-minis right there at the ask. And so what I think we're seeing at this point is just we're at a stage where the speculators still have plenty of money to goof around with things like selling gold or buying stocks or whatever they want to do. And that's all happening. But Jason, when this turns, our prediction is that it's going to turn quickly and that it's going to be actually fairly painful. And it's astonishing that we don't see more people taking chips off the table at this juncture, given the weakness we're seeing in all the underlying structural foundational aspects that would say we've got an expanding, healthy economy globally or even within any of the countries we care to look at. This is about as ill as I've seen it in quite a long time. We clearly have early 2008, maybe mid-2008 warning signs all over the map right now. But just like in stocks up through early 2008, no problem in the stock market.
Yeah, and I think a lot of reason why a lot of money has been pulled off the table, Chris, is there's so many baby boomers and people either close to retirement or thinking about it. There's also a lot of flight capital that's coming to the United States from other markets. But I think the reason is these people are chasing yield. When I talk to them, I have a lot of listeners on my podcast now. People are desperate looking for income. They either have a job or they're worried about losing it. And, their bills are going up on Main Street. The Fed's inflation statistics say that bills are not going up, but healthcare premiums are going up, rent's going up, et cetera, et cetera. And people are desperate. I guess they're gambling. They're taking a lot higher risk to find any type of income out there. It's very sad, people are taking so much risk just to find income, but they need income to keep their standard of living.
Well, they do, and that's courtesy of Ben Bernanke, who set the policy, who specifically said, I want to herd people into risk assets. He didn't explain how everybody was going to get out of that little box canyon he put them in, because it's not possible. But everybody is, I think, kind of hoping beyond hope that this all works out, fingers crossed and eyes closed, right? So one of the things that we end up talking about in Prosper a lot, is that it's time for people to consider taking money out of that system and putting it into tangible, real investments that they can understand. Investments in themselves. It could be investment in their own health. Of course, yes, if you're healthy, much more is possible than if you're not healthy. That's a great investment that pays off. They need to invest time in relationships and building their social capital, investing in certain types of material capital that have great payoffs. So I've got solar photovoltaics, and I've got solar thermal. They have extraordinarily good paybacks, really high ROIs on those investments. Insulating my house, same thing. There's all kinds of things people can do to reclaim what investing really actually means. And Adam and I are both involved in small local companies with good prospects, and we're helping them to figure out how to run their companies or find capital or doing things because we're working with companies where we know the people, we understand the products, we can assess the markets, and we think that's really going to be the wave of the future. This whole time of sending money off to Wall Street and hoping they don't pull the football away one more time is just going to be proven to be a false hope one more time. And we're not going to compete with a marketing machine that is Wall Street, but we are telling people they need to consider other things besides the paper products dished out by Wall Street to be an effective way and an important way to invest and really invest in knowable, understandable, quantifiable things that make sense.
Yeah, and it also feels good to help a small company grow. So the money opportunities may not be as safe or as easy necessarily with a small company as they would, buying a dividend stock or something like that. But at least, you're helping real people in the real economy. And you're also helping, it's like planting a tree with a small company. It's like you get to see it grow. It's kind of fun helping it out in that aspect as, I've been involved in entrepreneurial ventures as well.
Hey, Jason, it's Adam here. I'm just going to chime in on that. I totally agree with you. In addition to sort of those psychic benefits that you're talking about, I would agree with you that it's certainly not as easy as logging into your E-Trade account and buying an ETF, within 30 seconds. But you said safer, and I do want to challenge that assumption because I think everything we've been talking about up to now has been shining a bright light on the risks underlying the current financial system. And while a blue chip dividend stock is pitched as a safe investment, if we go through another 2008 style correction, that blue chip stock could be worth 40% less than what it is today in a matter of months. When you are deploying your capital locally into a small productive enterprise, if you're involved with it, you actually are able to control risks an awful lot more than for a company that you simply just write a check to buy their stock with, and the funds go off to Wall Street. So part of what the book is doing is really sort of trying to challenge the narrative, where for most people, investing is pretty much, they're told it's pretty much financial only in nature, but also the form of investing that most people have been trained to do is send your money to the guys at Wall Street, and hopefully they're going to bring more back to you, right? And we are trying to educate people that they have a lot more agency in the story than they've initially been told.
Yeah, that's a good point, Adam. We've seen dividend cuts from Kinder Morgan and Freeport-McMoRan, where a lot of people, including, billionaires like Carl Icahn, they didn't think those things would happen. So we've seen, very financially sophisticated and astute investors get lose big on their bets too. Well, my final question for you guys, since we have a time constraint, has to do with millennials and Generation Xers. They're in college now, they're graduating college. A lot of our listeners, we have a wide range of them, but we also have a wide range of millennials and Generation Xers who necessarily don't have a lot of money to start investing or any, but they're looking to, add skills and get in the workforce. They have student loan debt. How will they be able to prosper? What types of skills or things do they need to do to prosper in what is to come?
Adam, why don't you start?
Sure. I think Chris handed me the football because 2 years ago, I wrote a book specifically designed for that market, Jason, called Finding Your Way to Your Authentic Career. So given that we're under time constraints, I would say anybody that's really interested in our thoughts on that can go on Amazon and buy the book. It's pretty cheap. But what you're talking about, Jason, is largely what we address in the book under knowledge capital, which really is, at the end of the day, all about what type of mastery are you going to develop to create value in this world. And as we go into a future where we think valuations aren't going to be as liberally awarded as they have to date, what's really going to differentiate those who succeed versus those that don't are those who are value creators. And so you really want to ask yourself, okay, what type of value am I qualified to create, and what type, and of those options, which is the one I really want to sort of hitch my wagon to. So this is the marriage of what you know and what you know how to do. And Chris and I have a strong bias, and I won't get into all the reasons why in this interview, but we do think that the traditional education system has a lot of shortcomings to it that have evolved. It's way too overpriced. And for a lot of people, college is largely a social experience as opposed to, a lifelong launchpad for educational experience. And so we have a lot of people who graduate who really don't have a lot of marketable skills, or at least marketable experience, and they have to go out in the world and then find it. So there's lots and lots of opportunities for those that are, going to college and are trying to make some very big, important life decisions. Do I go to college at all? If so, what type of college? What do I want to study there? How do I want to leverage that later in life? Or those who are just graduated or in their 20s or early 30s, starting families, and wanting to make sure that the career path that they're committing to is one that not only is going to be profitable for them, but even more important, look, you're gonna make your bed or make your bets and roll the dice. The money may come, it may not come. What you want to make sure that either way, you're fulfilled by what you're doing. You're waking up in the morning and you're enjoying the life that you have and living with meaning. And that way, even if the money doesn't come, or there's a big economic downdraft and salaries across the board get handicapped or whatever, you've got that intrinsic value by your job that you actually feel like you're doing what you're supposed to be doing in this world. There are way too many people right now that feel stuck in their jobs. They didn't really have a great understanding when they went to college what they wanted to do with their lives. They ended up just following the herd. Now they feel trapped because they've got, mortgage, kids. They've been doing the same job for 10, 15 years and don't feel they know how to do anything else anymore. And the transition to something else feels too risky. The shorthand is those types of people, there is a path to break out of that. But the sad reality is that a lot of people are in that space. And if there's another, 2008 style correction and there's a big, massive round of millions of layoffs, those people get the worst of both worlds. They've been stuck in a job they don't like that perhaps goes away, and they find themselves without income or without, the type of expertise in the type of field they'd like to be doing now that they have a second chance. So that's the short answer, or the shortest I can give at least.
Well, and let me give a maybe a more terse one. Jason, I got to be honest. I have 3 teenagers. Well, one's 21, one's 17, one's 15, and we have honest conversations about this. And I got to tell you that the millennials and the generation after them, they kind of got screwed. All right, and that's as blunt as I can be. And the reason I say that is that when you really look at the bill of goods they got sold, which is now you need a college degree just to even get your application through the front door at Starbucks, and it comes with this extraordinary expense, and corporations have no loyalty to their workers anymore. And of course, there's unfunded entitlements that they are being forced to pay into when they're drawing a W-2 salary, and we've got all this crumbling infrastructure. So a lot of the millennials look at the boomers and they go, what did you do? You spent all this money and you didn't even leave us cool stuff, really. And so when I look at what's going on, and maybe, I think Adam might share this, we routinely advise people to become entrepreneurial, to not think of a paycheck as your salvation. Earn a paycheck if you want while you're getting the skills you need to get to Adam's point of how are you really adding value. We think the future is going to require people to be scrappy, flexible, unafraid of failure, really adaptable, really creative. Not those words don't always apply to people who come through a typical school setting, and we see people who are really wedded to this idea that there's a right answer and a wrong answer and that failure is bad and all that. In our world, increasingly, I'm admiring the people who understand how to add value. There will always be an economy. Whether or not we're using paper dollars to facilitate those trades, who knows? But there will always be an economy. People will always have needs. And the people who will succeed will be those who can figure out what the lay of the land is and how to add value at that moment in time, whatever that moment happens to be. I think that's always going to be true. So we really advise increasingly, and I come from a long line of people who went to college, and I got a PhD and an MBA, so you're talking to a guy who did a lot of time in school. And I'm not even pushing my own kids to attend college at this point in time because I don't know that given where things are going and who they are, that's the appropriate investment to make. So if I'm advising, I'll give the same advice I gave to my daughter who's just out there in the workforce now, is find a person or a situation or a job that you can work into that will give you the most killer set of experiences, with the understanding that if you're not taking something valuable away from that experience, it probably isn't worth doing. So yeah, that's sort of in a shorthand, really what we've been advising.
Yeah, I think a lot of educational technology companies and investments, they're going to disrupt it. You guys made some great points about what has happened to the school industry. It hasn't taught useful skills. Even with the textbooks and the professors, you can't really raise your hand, ask questions, and challenge the professor and ask him, questions outside of the textbook material. You basically have to just, regurgitate whatever's the professor said in his lecture or what was in the textbook. So it's frustrating in that sense because it doesn't encourage independent thinking. But I just want to thank you guys for your time today. Actually, your guys' book, I'm not sure if you're aware of this, but Audible before Christmas is actually having a 50% off sale for everyone who puts your book in their wish list. They can buy it before December 16th on audiobook for 50% off. So our listeners should definitely go there and make those purchases, and they don't have an excuse now because it's on sale.
Excellent.
All right.
Okay, guys. Well, thank you again for your time, and hopefully I can have you back on to talk about technology and the workforce and oil and gold and silver in the future.
All right. Thank you.